Coming up on Business Incorporated, global stocks tumble as oil prices fall. Sierra Leone iron ore crisis creates debt-wrapped ghost town. Tunisia quotes 2020 growth forecast to 1% from 2.7%. Hello and welcome to Business Incorporated. I'm Chimeze Obi Iwago. Well, a blend of exogenous shocks have sent the markets into a frenzy on what may only be described as a Black Monday. Here in Africa, the JSE shared 5.13% at intraday, while Nigeria lost 2.05% as the country confirmed its second coronavirus case. In Egypt, the EGX 30 plunged 7.71%. Kenya closed negative on Friday. And major Gulf markets nosedived today, with the Qatari index taking the heaviest hit by 9.70%. In Saudi Arabia, the market lost 7.02% at intraday. Elsewhere in the UAE, Dubai's index trimmed 8.29%, while the Abu Dhabi index lost 8.06%. And stocks in Asia saw steep declines today as oil prices plunged amid fears of a price war after OPEC failed to strike a deal with its allies on production cuts, adding to volatility already brought about by fears surrounding the coronavirus spread. The Nikkei 225 in Japan fell 5.07%, while the Topix index was down 5.61%. Mainland Chinese stocks saw sharp declines. The Shanghai Composite was down 3.01%, while the Shenzhen Composite slipped 3.78%. Hong Kong's Hang Seng Index plunged 4.23%. South Korea's Kospi also dropped 4.19%, and stocks in Australia tanked, with the ASX 200 down 7.33%. The stock futures in the U.S. tumbled this morning as investors braced for the economic fallout from the spreading coronavirus, while a shocking all-out oil price war added to the anxiety. As at 5:10 a.m. Eastern Time, Dow futures indicated an opening drop of more than 1,300 points, while the S&P 500 futures and Nasdaq 100 futures also indicated significant losses at Monday's open. All right, let's cross over now to London. There, the FTSE tumbled 8.2% at the open. Analysts already call it a Black Monday. Well, let's see what the intraday numbers are saying with Juliana Olainka. Hello, Juliana. Good afternoon. Okay, bring us up to speed with intraday numbers. Is the market still bearishly bearish?
It is. That's a great analogy there, Chimete, something that the traders would love. It's definitely a bloodbath. That's what they're calling it. Or, as you said, Black Monday. Some of the lows that we've seen in the FTSE are historic lows. They're going back to the 70s and the 80s, even before the Gulf crisis, just to determine how bad they are. I don't have all the numbers specifically, but at intraday, the last time I checked, the FTSE 100 was down by 423 points. Of course, when the FTSE's down that bad, the pound sterling does rocket up. So the pound at the moment is worth about $1.31. Airline stocks, huge consumers of oil. So even though because of Covid-19, their stocks are still quite low, they're really relishing off the back of these historic low oil prices. And for once, which is what the traders are saying, at least Covid-19 is off the headlines when it comes to business stories.
So how the oil company stocks trading the falling oil prices?
Well, we know that the FTSE 100, which is really steeped in oil and gas and all of those companies, this morning, they obviously had over £130 billion wiped off their stocks. Royal Dutch Shell, £19.6 billion. That's what they've lost in share value over the past couple of hours. BP, £17 billion. So at early trading, both of them were down by about 20%. They've regained a little amount. Royal Dutch Shell are down 16%, BP are down 18.9%, and they seem to be able to cope with what's going to happen over the past couple of days. But the mid-caps, so those who are much lower on the FTSE 100 or are in the FTSE 250, like Premier Oil, their shares are down 61%. Some are wondering whether or not they can come back from this. And also as well, Tullow Oil, their shares are down 47%. So a lot of people looking at bond and equity markets are really screaming recession as loudly as they can at the moment.
Well, we know it's all about coronavirus. So what is the latest on the PM emergency meeting on the COVID-19? Is the government considering offering any short-term bailouts to businesses in the UK?
Well, at the moment, Prime Minister Boris Johnson has pledged about £91 million into combating COVID-19. And the lion's share of that money is really going into science labs, research labs, trying to scramble together some sort of vaccine that they can use within the NHS. We know that, of course, next week, Wednesday, not next week, Wednesday, this Wednesday, gosh, the time just keeps ticking on. On Wednesday, in a couple of days, we're going to have our first post-Brexit budget, which has already been renamed the COVID-19 budget. So I certainly suspect that any kind of business rates or reductions will be announced then. The COBRA meeting with all four parts of the United Kingdom, as well as chief medical executives, the health secretary, the scientific chief advisor to the Prime Minister. They've all been attending this COBRA meeting. They've been in and out of Downing Street all morning. We don't have any suggestions about what they're talking about. I suspect that later in the day there'll be a statement. But what a lot of people are suggesting is that we'll go from a contained phase to a stop and spread phase. So now it's in the UK. We know that it's not just infecting people that have come from these areas. We know that it's actually going from person to person, which was exceptionally worrying. So there are some measures that will be taken in place. And once they've spoken to these senior ministers and health officials, more information will be delivered later today, Chimaze.
And I'm sure investors will be, of course, setting their eyes on the budget to be delivered on Wednesday. Thank you, Juliana. And oil prices plunged after OPEC's failure to strike a deal with its allies regarding production cuts caused Saudi Arabia to slash its prices as it reportedly gets set to ramp up production. International benchmark Brent crude futures also plummeted 26% to $33.90 per barrel, while U.S. West Texas Intermediate crude dropped more than 23% to $31.73 per barrel. On Saturday, Saudi Arabia announced massive discounts to its official selling prices for April, and the nation is reportedly preparing to increase its production above the 10 million barrels per day mark. In the precious metals market, gold prices fell 1% today as investors booked profit after the metal rose above the $1,700 per ounce level for the first time in more than 7 years on fears of a deeper economic fallout from the coronavirus outbreak. Spot gold fell 0.6% to $1,663.35 per ounce, while U.S. gold futures slipped 0.4% to $1,665.30. Among other precious metals, silver fell 3.9% to $16.63 per ounce. Palladium fell 4% to $2,463 per ounce, while platinum was down 3% to $873.50. And back here, Nigeria seems under threat from the coronavirus as oil prices, which make up more than half of government revenues, have fallen more than 20% since their January peak. China accounts for close to a quarter of Nigerian imports, greasing much of the country's supply chain, and the possibility of the virus spreading within Nigeria's borders is adding to the pressure. Let's take a listen.
Yetunde Oluide is proud of her gift shop, which she has run in bustling Lagos for nearly a decade. But now, with Chinese supply chains broken by coronavirus closures, she is losing more than 2 million naira a month.
For the past 2 months, we've not been able to ship in anything. A lot of our products are sold out. We need to restock because we have a high demand for it, but we can't do anything because the suppliers are not open, the warehouses are not open, the logistics company are not open. For health and safety reasons, which we all understand. So we are in between selling what we have now, waiting for the virus to totally clear out so everybody gets to work.
China's economic health is also crucial for oil prices, which make up more than half of Nigeria's government revenues and have tumbled more than 20% since January. Falling oil revenues, disrupted supply chains, and the threat of coronavirus spreading within Nigeria threatens to affect growth in its economy and boost borrowing costs just as it plans to return to the Eurobond market. Financial analyst Mukhtar Mohammed warned that if the virus shutdowns start to impact Chinese-backed projects, the monetary value of that cannot be quantified.
You look at the Ray project, you look at the airport terminal, new airport terminal project, you look at the Mambila Plateau project, the power sector project. So it's just basically all our infrastructural projects will come to a standstill. And again, the monetary value of that cannot be quantified.
Nigeria confirmed its first coronavirus case 2 weeks ago, and local stock markets plunged, wiping some 300 billion naira off its market cap. If the virus spreads and workers and shoppers stay at home, much-needed revenue from a higher VAT rate passed last year will evaporate. Nigeria has arguably taken bigger hits, but its depleted buffers and shaky exit from a 2016 recession, with growth around 2%, could make this time tougher. Moody's, which downgraded Nigeria's outlook in December, warned this week that its debt, which has ballooned to 26 trillion naira, made it particularly vulnerable to external shocks. Last week, S&P also downgraded Nigeria, citing declining external reserves. It could increase Nigeria's borrowing costs as it plans $3 billion in new Eurobond offerings. The yield of Nigeria's $2049 bond rose by 1 percentage point from mid-February to end February as the coronavirus roiled global markets.
All right, let's take a quick peep into the European market. And of course, I have Chelsea Dulany there standing by to talk to us about what's going on there. Hello, Chelsea. Good afternoon. Well, we've seen oil prices plunge more than 30% today. What's the state of the European markets at the moment?
European stocks have been really battered today. The DAX here in Frankfurt opened down almost 9% at one point. It's pared those lines a little bit, but it's still down about 7.5%. And that's really being mirrored by other stocks in Europe. The FTSE is down almost 7%. The Pan-European stock index, the Stoxx 600, is also down about 6 to 7%. So there's a lot of fear in markets today. Coming into this week, investors had already been really on edge and really nervous about the impact of coronavirus and the economic measures and quarantine measures that governments have been taking to contain that virus. And that's going to have a significant economic impact. But if you add in the oil price plunge to the mix, it's going
now,
to
this
add
drop
more
is already one of the largest in decades, but could prices fall even further from here?
A lot of analysts are saying that this might not be the bottom for the global oil market. Analysts from Goldman Sachs, for example, have estimated that this we could see oil fall to as low as $20 a barrel. And this is really an unprecedented situation because on the one hand, supply is going to go up now that Saudi Arabia is going to just lift its cap and start producing. But also demand right now has been really, really crippled by the coronavirus. So that mix really points to a longer slowdown for the market.
All right, thank you very much, Chelsea, for those updates there. We'll take a quick break, and when we return, we will look into Côte d'Ivoire and see the developments there.